usually before we start one of our conversations with our visiting scholars, we like to learn a little bit about them. And I've also found that as I've served on many investment committees and we're interviewing managers for adding to our portfolio, before even asking their style or their performance record, we'd like to know something about the person. Because so much of how you invest, your tolerance for risk, how you see opportunity, how you deal with adversity, these all depend on the kind of person you are and the kind of background that you come from. So maybe, can you tell us a little bit about your family background?
Okay.
A little bit about your family background so that we can have a sense of how you emerged from that background into the very successful investor that you are.
Okay. So before I introduce my family background, as Lulu asked, I have to say a very big thanks to Lulu, who make everything possible here, to be honest. And also thanks to Golden Wu, who makes this forum. And also thank you all to come here today. I mean, I know you are all very busy, right? Especially after 4 days raining, right? Or 3 days raining. Really thankful to everything. Then I talk about myself. Okay. In fact, I came from China like 2 days ago for this trip. I'm 100% Chinese, mainland Chinese. When I graduated from Columbia Business School in year 2000, I think there are only 5 Chinese students who are from mainland among the 550 plus students in my class. So I'm fortunate enough in my early stage of my career and my study life, I attended Columbia Business School. So there's a reason why I came a very long trip here and just for this forum and 2 classes the day after tomorrow. I was born in Qingdao. Some of you drink beers, right? Yeah. So if you went to a Chinese restaurant and if you drink beers, you must know Qingdao. So it's a beautiful city, many beautiful beaches, Qingdao, and it's up to the northern part of China. Because China is a huge country, right? I talked to Lulu and Mr. Fu, right? If I can, this gentleman speak excellent, excellent, great Mandarin. So I call.
And it doesn't tell it.
Okay, but I will prefer to call him Mr. Fu, use his Chinese name. So China is a huge country. It's huge. I mean, Lulu is originally from Shanghai, the biggest city in China, right? My wife is also from Shanghai, okay? But before I went to college, I cannot understand almost any Shanghainese, Shanghai local dialect, to be honest, right? When the first time I went to college, I heard some people spoke Shanghainese. I thought it's Japanese, to be honest. Right? Shanghai is more like Japanese instead of versus Mandarin. So China is huge. I mean, like we discussed. I will, I hope. I'm not sure if the recording will last for how long, but I will even prefer call China United States also because it's so different. I mean, the food are different, right? The accent is so much different. So that's why we are different. I'm from northern part of China. I'm from Shandong, if you know, right? Shandong people are usually bigger. I mean, in terms of size and height, yes. So I'm not that tall, right? Like some of you guys. There's a tall Chinese guy from Shanghai. He's more than 1.9 meters. Yeah. So, yeah. So I'm from northern China. The people from different parts of China are so different. Not only the accent. So they are usually that's where Confucian come from. Okay, that's very traditional Chinese. That's where Confucian came from, and also Mengzi and the other important folks came from. I spent entire 18 years before my college in Shandong. I never went outside of the province before I went to college. So I'm that local. talking to my parents about my parents. My mom was a CFO at a state-owned machinery group. She was CFO because my daddy is busy for work or something else. I don't know. Yeah, but my mom spent more time like as a regular Chinese to train me, to educate me. So she helped me to choose my major in economics. So I think because I was very good at number, I was a very quantitative guy. In high school, I attended the Olympics math, game for high school. I was ranked top 10 in my province. But you know how big my province is? It's more than 100 million people. Not for students, as a total population. So I was very good at number, but I was chosen a major by my mom for the economics. And then if you go further back, like 500 years ago, yeah, because in Chinese they have the book for the family. You trace back to 500 years ago, even longer. So it's only from Qi Guang, if you know. Yeah, some Chinese know. Yeah, Qi Guang was important military figure a long time ago. Yes. So that's me. I'm from Shandong. I'm from Qingdao with some background, decent background in Chinese, in Chinese society. And I'm very...
So your mother steered you toward economics.
Yes.
And then from economics, were you then self-directed into the investment world? How did you decide to become a professional investment manager?
Yeah, because finance is a part of economics, right? Or investment, right? So I went to university in Tianjin. It's another city, right? Spent 4 years. It's a very boring city, to be honest. I like the city, but in fact, it's boring, right? I spent 4 years in
beer, huh?
Yes, yeah. Tianjin is one of the early commercial hub in China, especially like 90 years ago. It's a Beiyang Zhengfu, if you know, right? It's the military figures. So I spent 4 years in Tianjin, which was the first modern university in China. Originally, it's called the Beiyang University, okay? And then after the liberation, they changed it, okay? And then I moved to Shanghai, okay? Hear my story, okay? I'm from Qingdao to Tianjin, and then I moved to Shanghai for Fudan University. Okay, for Fudan University, I got my major also in economics, but I have more interest in investment. And then I moved to Nanjing again. So if you come here today, you know the history, geography of China. So I moved to Nanjing for important program by Johns Hopkins University in China. It's called Hopkins Nanjing Center. And then I got a roommate, like Mr. Fu, who speak Mandarin, who learned Mandarin, like this gentleman, who learned Mandarin, he learned Mandarin in Taipei, and I got a roommate from New York. He is a Jewish boy, grew up in my city, and we became lifelong friends. He was my best man for my wedding in Shanghai, okay? And our relationship is so good. I mean, he had a fun. Later in his career, he came to Columbia, CIBA, and also business school. That's the reason why I came to this school. Yes, so everything is built on my experience in different part of my life. So that's the time I knew America. That's my point. Okay, I was a very local Chinese. Okay, I never went out our province before 80 years ago, and then I came to America. After I went to Hopkins Center, I went for BCG in Shanghai, and then they sponsored me. So I was benefited a lot by American corporation because Boston Consulting Group sponsored my study here. He paid for the business class for myself and me. Yeah, so I live like 2 blocks away when I study here. So yeah, I'm a person local Chinese, but was benefit tremendously by American corporation. The universities, to be honest, that's me.
So having a strong basis in math and economics seemed like a natural preparation for going into the investment world. But what made you choose value investing? Because we were talking about this before, that in the US, the two major styles in equities is growth investing and value investing. And both have been very successful. You prefer the value because you told me, well, value is the only way to invest. It makes sense. And so coming from the consulting world, you probably are very analytical, and value would fall into your approach to how to analyze things. But your specialty is value investing in China.
Yeah.
Correct. So how is value investing in China? Is that different from value investing in the rest of the world?
Yeah, these are two excellent questions, right? So number one, why do I choose value investing? Number two, what's the difference between it's in China and in the States? I choose value investing. No. First, I know value investing at my 15 years reunion at Columbia Business School, to be honest. Because Professor Bruce Greenwald was so hot at my time, I even cannot attend his class. So, but when you become alum, you become kind of important. So I got the right to attend one of his sessions at the Uly's Hall, the building I like very much, okay? The Uly's Hall. So I bought a book. The professor usually have their assistant selling book in front of the gate, right? You know that, right? If you attend the events. So I bought a book, which is an excellent book, Value Investing. There is our host. She knows the book. Value Investing from Graham to Buffett and beyond. Now I know investment banker is just a mediocre job. Yeah, now I know, I was so sorry that when I studied at Columbia, I didn't study investment enough. But I really appreciate Columbia. Even after graduation, 15 years, I get a chance to know value investing at an alum event. But that's where that's the start of my investing chapter of my life. Okay, so I spent the next about 10 years also in investing. And then let me finish your question on what's the difference between China, the Chinese value investing, and the US value investing. Value investing, in my mind, is the only right way to do investment. I think it's the same as what Mr. Warren Buffett and Charlie Munger said. I attend Berkshire Hathaway shareholder meeting, except during the pandemic, almost every year, okay? I think if you do investing, it's investing in the firm, right? So you have to do the cash flow. That's all about investing. You buy it at a discount. Otherwise, you're buying it because you think somebody else is going to buy it, right? That's speculation, right? That's a gamble, right? You buy it either because of a company or you buy it because you think somebody is going to buy it. If you buy it because you think somebody is going to buy it, you bet, right? So I think value investing, like what Mr. Buffett said, is the real way for investing. That's why I like it. But in China, I don't think there is people who really know value investing, because there are not many important investment figures started at Columbia Business School and practice value investing in China. In my view, if you never started at the Columbia Business School, I'm biased, right? I'm biased because I attended school here. Yeah. So, yeah. Thank you, Mr. Fu. Okay. So, I don't think the excellent value investment in China. Why is different? Let me give you an example. The volatility of Chinese stock market is 3 times of US. US up 1%, in China it's up 0.5%. If US up 2%, it's 7%. It's crazy, right? So in China, if you do value investing, the environment is different. That's one example, volatility. Another example is about the company.
So you think value investing is less volatile than growth investing?
No.
Therefore, in China, where you're super volatile, value is really gives you a little more sleep at night.
Yeah, because it's super volatile. So you have to be mindful about the market, even if you do value investing. Because in US, it's 1% per day,
right.
But in China, it's 7%, right. 3 days in a row, right? So it will be bad, right? So that's why you need to be mindful about the market. I wrote a book. I was talking to Columbia Press, University Press, about my book. They ask questions. But the name of the book is Value Investing in China. I have a model in that. And I think there are a number of factors you need to keep in mind if you do in that. So market is one thing you should pay more attention than if you do value investing in China. That's one difference.
Yes.
Yeah. Also, there are different in accounting rules. Also, to be honest, also different in terms of the integrity of the management. Right? Right? Some people are laughing. They know China, right? Hey, yeah. Hey, China does not. China started their PRC accounting like 35 years ago. They don't have accounting 35 years ago. But the US have accounting from the inception of Wall Street, right? So yeah, if you look at the accounting number in China, you should really know if you should really have your own judgment if the number is right or wrong. So that's because everything is based on number, right? So that's a huge difference for investing in China and investment in value investing in the States. That's two examples.
Well, when you talk about volatility, obviously the most volatile is when you're mark to market in the public markets. And so when you go beyond the public markets and you're in the private equity and capital, where you're not mark to market, how do you then look at the attractiveness of value investing versus growth investing when you don't have the market volatility on a day-to-day basis?
That's an excellent question. But in my view, again, is almost the same as Mr. Buffett and then Mr. Munger. Because I attend their shareholder meeting regularly in the past 9 years or so. In fact, Mr. Buffett, probably also Mr. Munger, has a biased view against the investment banker. I was an investment banker for a long time. Okay, they do not like investment banker. Okay, Munger even does not like a lawyer. Even he was a lawyer a long time ago.
Does Charlie have an MBA? I know Warren does, but does Charlie have an MBA?
No, I think he went to Harvard for law school.
Huh? Yes,
Yeah.
Yes.
Yes, master in law, I think. Yeah. Yes. Yeah. So they also have a biased view against private equity. Yeah, that's the point I want to say. Okay. They don't understand why the private equity fund manager charge 2% per year and take 20% carry. They don't understand. They're so frustrated. They say you should buy index fund, right? They should buy our stocks, which is free, right? You should pay for the banks, for the brokerage, right? So for private equity, I personally, to a certain extent, I don't 100% trust their writings in terms of their return sometimes, okay? Because they're not market to market, right? For example, DD, if you know DD, right? DD is the number one travel app, right? But how can you just, I mean, it's delisted, right? It's delisted from US, right? So, yeah. So I think private equity is very, very important because you have super talented people to manage your money and to put it into companies in great sectors with very high growth rate, right? I think is excellent, right? But I still believe if your goal is to make money with enough liquidity, because private equity, you don't have liquidity for 3 or 4 years, right? Yeah, Mr. Fu agreed again. Yes, right? I mean, for example, if you buy a public fund, if you buy a private fund investing in security, public security, you can buy or sell any moment. Okay, so yeah, I think, to be honest, in my view, I think private equity is a great contribution to the society, to the companies, in growing sector. But for investment, I prefer value investing in public equity. Yes.
And the whole question of whether to invest in China or not, I think that's probably still one of the most discussed issues in all the investment committees that I sit on. And I've heard some very important investment people say that in the next 5 years, fund managers who get it right on China, it's going to make or break their performance. And so far, it's been up and down. After the November rally, people thought, I missed it. Should have been in China. Yeah. And now, of course, it's been very painful to be in China. So the jury's out whether one should be invested in China or not. But as you look at whether global investors should be in China, clearly you talked about the inherent volatility of the public markets. But at the same time, you said it's important to look at the cash flow, look at the numbers. You want to have transparency. People still say that they don't get transparency in China, that what information you get often comes too late, often comes in partial pieces. So how do you, as a investor in China investments, how do you address that source of risk, not getting adequate information on a timely basis? How do you address that?
Yeah, this is a very good question. It's a classic question. How do I answer that? Okay. Number one, I agree with you. The market is not good. I mean, Chinese stock, honestly speaking, suck, right? In the past 1 year or 1.5 years, the economy was liberalized after the pandemic, but in fact, the stock market does not perform well, including the economy. Everybody thinks so, and most of the people think so. And then, second, about the disclosure about Chinese company listed in domestic market, Asia, we call Asia, okay? They have a similar requirement for quarterly report and annual report. I was a banker all the time, right? I was helping my client to fill all the form, etc. So they have a similar requirement for quarterly report, annual report, and also PRC accounting is similar to US GAAP now. Okay, if you take a test for CPA, but yeah, if you learn accounting from Columbia, which I think is one of the best class, you should. It'd be very helpful for you to pass the test in China for CFA, to be honest. But still, for non-disclosure, non-required disclosure, you have issues. I mean, sometimes people are rumoring about insider information, and sometimes when you attend a shareholder meeting, including a chairman, the CFO, nobody attend. They have very young folks. Yeah, we buy companies, and I send my young folks go there, right? And nobody show up. It's why nobody is. They're working on important business matter. I mean, it's joking, right? I mean, shareholder meeting is the most important business matter, right? So, in that regard, you are perfectly right. They don't know how to interact with investor. They don't know what their fiduciary duty is. So, and then you have to have many different ways to understand the business. In my view, from where these people are from, there's one guy sitting at the back, did an internship at my firm in Beijing, and we when we look at a company, we look at the CV of all the board members, management. Those guys, those young people, like goes direct to the expert. I say, no, read me to me which college or school he attended. Okay, how old is he? Okay, what he did 20 years ago. So that's a way to understand people. It's really important. So you have many ways to understand the people. To like what Lulu asked. Okay, so you need to understand the management first. Then you judge if this guy or this lady exaggerate, or this guy or this lady is too modest. Some people is really like bragging. Some people is really modest. Usually, it's the same as the volatility, the same issues. So you have to make your call to zoom in or zoom out the words to make the right sense about the real business facts. And also, final word on that, you need to always think about the common sense, the business nature, to understand the financial reports in China.
Do you think the trend is toward more openness, more transparency in corporate disclosures? And is the oversight improving now in China versus in the past?
It's also a great question. I was thinking, how should I answer that question? I think
truthfully.
Truthfully. I think China is like a teenager in terms of capital market. China is It's a very old country, right? You call it 4,000 or 5,000 years of civilization, right? I don't know which one is right, but he said it's thousands of years civilization. But in terms of capital market, China is a teenager. I mean, Chinese stock market was set up in 1990, December, okay, 2 exchanges, right? The first 10 years or 15 years, like insider information, speculation, manipulation, all over the place. So I think China, Chinese market was regulated in a right way in the past 15 years, but it is still very young. So I think the first matter is not if it's open enough. The first matter, if it's just a teenager, know what's right and what's wrong. They don't know. Yeah, Mr. Fu, they don't know what's right and what's wrong. I know, because I work at I know to a certain extent, because I studied at Gambia School. I work at Goldman Sachs. I work at Morgan Stanley joint venture CICC, which is very international. I work at BCG, right? So my concern is that they don't know what's right and wrong. So they need more talented people to teach them. But they often hear different voice. Often some of the voice is wrong and misleading. Yeah.
In the U.S., you look at the consultants who follow U.S. managers. There's clear indices for growth investing and for value investing. And over the years, I think Warren Buffett will contend that value investing over the longest period of time has been the most successful. But I think it's a fairly fair horse race, depending on which cycles you track. But both have been fairly successful styles. But in China, when you look at the markets, when the market's at a run, that's really when you want to be in the market, because there's such huge beta there.
Yes.
And when a market's on the run, it's generally on the growth side. And when the market is playing defense and struggling, the value guys may cause you to be down less than the growth guys. So given that, I haven't seen really good data on long-term value performance versus long-term growth performance. Do you have any indices to help us to guide that?
Yeah, it's also an excellent question, because Lulu was a specialist in investment too, right? That's why she asked this question. Talking about my firm's fund, which was founded 5.5 years ago, because I was so much bored as an investment banker, right? And I think that's a right career choice if you do investment. It's 5 years. I checked it 2 days ago. 5 years. Yeah, because I come here to talk to you. 5 years is 15% annualized compounding rate. With the market, there is an index is equivalent to S&P 500 here. The CSI 300, 沪深300, CSI 300, it's 2% annualized, very low. So my alpha is 13%. If you check the pure products, it's about 6.9%. Let's say 7%. So the alpha is 8%. But I don't think that's an excellent example because it's too short. In China, I think why value investing sometimes doesn't work because of the accounting problem. Because you do the cash flow, the accounting is wrong. I don't think the bank's financial statement is solid enough. I mean, look at the write-off. I was doing bank's IPO, at CICC for a while. Look at the write-off, right? Look at the coverage ratio. I mean, so you cannot rely on the net income or historical cash flow, which is based on their accounting report to project the future. You have to make huge adjustment by yourself. As I said, some people is very modest. Some people is too much bragging. In fact, as you said, as you hinted, in China, there isn't many successful value investor. There are some people who boast their value investor, like, because they invest in multi, right? Value investing is not as simple as investing in multi, right? It's all 2年, right? So as they didn't go to decent school, I think.
Right. So in talking about investing in China, and you focus really on one of the big issues is risk and risk management, whether it's risk related to the markets or risk related to fundamentals in regards to accounting and so forth. But the really biggest risk for most global investors when they think about China is really the global issues. Right now, there's a very fraught relationship between U.S. and China, and increasingly China now versus the other developed countries, Europe and Ukraine has made the situation even more tense. So, and every day it can change. The pronouncements come out of Beijing. One day it's conciliatory toward the U.S. The next day it's very hostile. So how does a global investor be able to manage that kind of risk, which in fact overwhelms all the other risks that we've talked about? Because if China comes out with a pronouncement that is very, very ideologically opposed to the rest of the world and the markets panic, you can have the kind of downsides that will be far more severe than any accounting issue or any kind of short-term market volatility issue. So how do you begin to address that question? And I think it's something that everyone in the audience would like to hear. How do you view what's going on in U.S.-China? Is it going to end badly? Is it going to end well? What do you think?
Yeah, it's a great question. Yeah. Just by the way, Jack, get the Diet Coke for me. Yeah. Thank you. Yes, I need some Diet Coke. Yeah. Yeah. They have new classes for. Yeah. Okay. So.
And we've talked about this before. In fact, when Kevin and I were talking over Diet Cokes before, we spent most of the time just talking about U.S.-China. There's so many other things to talk about for investors, but end of the day, it's going to be how U.S.-China turns out. It is going to be whether a cold war or hot war, whether it gets really hot and Taiwan's involved. These are all very existential questions. It's not just a sheer accounting issue. So let's maybe share some of your thoughts that we talked about during our Diet Coke session.
Yeah. I think everyone has an ethical standard, lawful standard, ethical standard, and a personal standard about their investment, right? Some investors say they never invest in a company that killing animals, right? Like abattoir or whatever, or slaughterhouse. They don't do investment like that. Some people say they don't do the traditional energy. They only do green energy. But I think there's a wide range you can choose based on your personal preference, right? So I see things from this perspective. For example, in China, in Chinese Asia, there's a sector called import replacement, right? Because they cannot buy from overseas, like semiconductor. They cannot buy it, right? The U.S. does not. Like sell it to China. So you have to buy some. There's a niche sector. It's called import replacement sector. You can. Those are stocks you can buy, right? So my point is, everyone, number one, has a different tolerance about different political matters, etc. But for me, number one, I need to make sure it's lawful, the ethical. I accept that standard. I'm really serious about that. For example, I never buy companies in cigarettes. I never buy cigarette companies. But if there's something like which is related to geopolitical matters, for example, the import replacement sector, but it still means some very positive return if the tension between the two countries will become more serious. It becomes stronger. The stronger the tension between the two countries,
more replacement.
The more replacement. You should buy that, right? So that's how do I see those? If there's a value, yeah, if there is a value. That's exactly right, yeah. So I won't just say because of a sector is under pressure from the US, you don't buy it, right? You need to see it from impacts on their value projection perspective. Yeah. So I don't know if I answer your question
Well, I think
in a fair way. Yes.
Well, being a value investor, stock picking is very important. So you really want to go individual issue by issue, company by company. But also we know in the world of real investing, sometimes the sector or the country decision is going to far overpower what the company decision is. So which makes it very difficult, because if you have the very best house on a really bad block, you're not going to do too well real estate wise. And so if you are there times when, because you are a China value investor, and there are times when you feel it's really a bad time to be in China right now. Is there any option for you in terms of just pivoting to cash? Does your mandate allow you to do that, or do you have to be fully invested because your investors are paying you to be put into China exposures?
Then let's talk about the country, but also the market, right? I hope you guys don't think I'm too pro-China, too against China. I mean, China's GDP in terms of PPP, purchasing power parity, is bigger than US, right? If you use PPP term, the size of the capital market could be bigger than US, and the money, if you use PPP term, could be bigger than US. So the question is, if the US market needs Chinese money, I mean, yeah, so we can ask the question in a different way, right? So, yeah, so that's my point. I mean, the issue now, or the good thing or the bad thing, right? I don't say it's good or bad. China is already huge. It's too big. It's too rich. The economy is not good, but there are many rich people, many talented people who also know the US. I mean, yeah, I think there are not many people like Mr. Fu really know China. I mean, yeah. If he's modest, he say I may not know, right? But that's what I expect. But China is already huge in my view. Yeah. So I lose money. Our fund lost plus 20+% last year. So it's very serious for us, right? But I still think it's the same thing. If you look at Berkshire Hathaway, the lowest point of Berkshire Hathaway, they lost 46% in 1 year, right? So that's a way of value investing. So it really depends on if you think there are future cash flows coming out from that country, from companies in that country. It's about money. It's family. It's all about money. It's all about your choice. The same thing happened like 31 years ago. I was lucky enough to rotate 1 year in Goldman Sachs in New York. I parked 1 year in New York here, right? After 1 year, my manager say, "Hey, Kevin, you need to come back." I say, "I want to think about it." But my decision is I should go back to China. That's the only way for me to get my own clients. And then I became a very successful investment banker in China. I did some of the biggest IPO. Let me tell you how big it is. For example, I finished complete one IPO. The size is not number one, but it's only one bank, the Solid. I did a Solid sole underwriter IPO with 50 billion maybe. 1 plus 4 young folks like those folks. We made 1 billion fee for CICT that year. Fee, okay, not the proceeds for the company. RMB, yes, yeah. So, but in your term, maybe it's not sizable enough. Yes, yes, it's fair enough, especially in today's Wall Street, right? So, if I didn't go back to China in year 2002, how can I have this like super league clients? I mean, they're all Fortune. They're not Fortune 500. They are Fortune 10. Like, I have like 4 or 3 of the Fortune 10 customers, So my question is, it's a choice about your judgment, about the future cash flows in different countries. My choice, I follow the cash flow. But like Charlie Munger and Warren Buffett said, it's more and more difficult to do business in China. That's what he said. That's not what I said. Warren Buffett also said he does not know Chinese language. Okay, that's a huge disadvantage for him. I know Chinese language. I know the difference of people. I know who are more modest and who like bragging. So I have the advantage. I want to use that edge to my investment.
So I think you are a really important person for so many of our young people to think through the decision of whether you come to Colombia, you have your business school degree, do you go back to China and use your degree, your contacts to build a business in China, or have things changed in China so that you need to either pause and stay here for a while or make a longer-term commitment outside of China? Yeah. And I know it's a sensitive question, and if you don't feel comfortable answering, it's okay, but it's a question many young Chinese are facing right now because things seem to be different. We hear about the lie-flattened generation in China. We hear about the high unemployment rate between the 16 and 24-year-olds, 21% unemployment. So how would you advise young people who are here now, getting a great U.S. education? Are there opportunities to go back and help China to build its economy again, or do you think there's time to really wait and see?
Yeah, it's a challenging question. Can I ask the young lady sitting here, because she was listening So what do you think? I mean, I believe you are from Asia, right? Possibly from China. So what do you think, from your own heart?
So, I mean, like, it's okay. Okay, so I think the tricky part here is that for the people, especially like us who already study or live and work overseas for more than, let's say, 10 years or 5 years, from the culture-wise or network-wise, it's actually a little bit difficult for us to go back to China, build up our working network or the relationships, whatever, but the career in China after staying overseas for a long time, right? But also, on the other side, like you said, if you speak the language, you grow up there and you know exactly how the society is. Like in China, there are a lot of opportunities, right? So it's like always like it's hard to decide if stay here has better growth opportunities or go back to China, start to like build up your career and your network, and then really like you have more advantage in the future.
Yeah, I got your question. So I think there's some principles in general, right? Okay. Number one, if you want to go back, you should go back as early as possible, because the later you go back, the more difficult for you to get back to Chinese mainstream community. The same thing happened to me. In year 2002, my writing in Chinese is not good. I don't understand the Chinese people. People are laughing at me. They talk to you like gentlemen, like Mr. Fu, like at Goldman Sachs, very polite to me. But they really look down at me because I'm supposed to know China very well, but I don't. So if you want to go back, you want to go back earlier. And then, that question, there are pros and cons. Yeah.
But if you are, as our question comes from someone who has been out of China 5-10 years, but you do want to go back to China and create your success there. How do you then win the trust and win the respect of the Chinese market when you've been sort of overseas and they think you may be out of touch? How do you go back and have that acceptance that you need to have for success?
There are many private companies, right? like Alibaba, etc. But now they're in difficulties, right? But before that, before like the pandemic, we accept CBS graduates, etc. Like Baidu, they're all excellent companies. Like CICC too, right? Like CITIC. So I think you need to get some of the hard skills, like writing in Chinese. My daughter went to kindergarten, went to American kindergarten. My daughter just told me, said, he met some Chinese kids from Chinese high school, but they like to speak Chinese in private situation. My daughter will talk to her friends in English in private situation. She's so American, right? So my point is, for people who want to work in China, they really need to have the hard skills, like know how to write Chinese and how to do Chinese speeches or write Chinese paper. And then that's good for you to get, that's good for you to get people's acceptance to go back to mainstream. That happened to me like 20 years ago. Yeah, there's a question from Ryan originally. Who are my mentors in my career path? There's a lady who was a manager director at Morgan Stanley joint venture, and she trained me very well on that. And then I'm really thankful to her to help me get accepted. Yeah.
So that's one option. To really brush up on your skills and go back and try to be as value add as possible. But for a young Chinese who's been overseas 5-10 years, so you can go back, or you can either start your own company, or you can work for a Chinese company and be looked down upon possibly, or work for a multinational company that wants to hire Chinese-speaking employees who supposedly know the culture, know those business practices, and may offer a much more hospitable environment for a returning Chinese. So those are three different options that I'm sure all of you could face. Do you think any one of them is more likely to be a good experience for people in our room here?
Yeah, China also has cycles. Okay, I study cycles in economics term. China's cycle could be longer, could be 15 years. So, I mean, the days you may like, for example, that beautiful lady here, for days you liked before may come back later. So you usually need to time the cycle versus your own goal and your age. Okay, so it's not, there isn't a standard answer for different people. For example, I believe there will be good time for economy after 5 years or 7 years. So at that time, all the sectors will be open to more overseas Chinese students. But I think start to work for multinational in Shanghai or Shenzhen will be very nice for you to land in China. Okay, first, like what I work for, like I work for Goldman Sachs and then CICC. Yeah, this is an excellent choice to start your your career in China. Yeah.
No, I agree. I tend to agree with you. We were talking about some friends we have in common, and one of the other speakers we had at the Wu Forum, who was a Wang scholar, was Wei Christensen, who was for many years head of Asia for Morgan Stanley, first as chairman of China, and then co-chairman of all of Asia for Morgan Stanley. And she developed a huge and very prestigious business base because she was Chinese, but her Chinese clients said, oh, Wei understands how Americans do business. They understand American banking. If they're going to be inviting us up in the Morgan Stanley research, then she will be able to help tell our story. So I think that was a very successful positioning for her. And I think right now, with China is such a question mark for many multinationals, whether to commit or not, and they're being more cautious about hiring and building their staff in China, this might be a time for a young Chinese person returning to China after being educated here to say, maybe companies like Goldman or Morgan Stanley or Estee Lauder or Colgate, who've been having more trouble now hiring and bringing people to China, this might be time to look for an opportunity there. Well,
it was 5 minutes, I think.
Well, we have maybe a few more minutes. Are there any other questions? Please.
And it's so much. Just with how U.S.-China relations are now, I'd love to understand how that's impacted LP dynamics. So if you're a GP in China, how important are Western world LPs, and has that sort of changed over time, at least in the past couple of years?
Okay, that's about private equity, right? So yeah, LP and the GP. Okay, I think the Western money usually only choose the trusted GP, right? In fact, there are many successful fund managers from Goldman Sachs, and the Zhang Lei, Hill House is a different story. He's not from Goldman Sachs, but people trust him. But nowadays, even those folks from Goldman Sachs should have difficulties to raise money from the Western world. That's the truth, right? So I think for GPs in China, it should be quite difficult for them to raise money from the West. No. Local money is even more challenging. If you state-owned money, it's state-owned money, right? Of course, it should be challenging, right? Because that's the money for the people, of the people, right? So for private company, for the shareholder of listed companies, I mean, if they have money and if you can raise from them, it'd be good. That's the second part of your question. The first part is about the relationship between the two countries. I think now is a very good time to talk about it. I think about 1 week or 10 days ago, everything became warming up a little bit, right? You saw signals, positive signals from both sides, from both governments. The ambassador of the US in China has some mini-group discussions talking about people's communication. In fact, I came from Shanghai, from a seminar in Shanghai. Is about, they call it people-to-people communication is the foundation of the two countries' relationship. I don't know if there is a propaganda, but I know if those seminar was held in Shanghai, they should be pre-approved. So, but that's good. It's already approved, right? So I can attend the seminar and I can talk. I even thought this is part of the whole thing, warming up. Because in November, I mean, the top leaders, hopefully they can meet in San Francisco during the APEC meeting. If the two superpower leaders can meet each other, shake hands, I personally think they have quite some common in personality. I mean, they're like, I don't know if it's right or wrong, but I think they can be nice to each other in terms of personality. So I think in the past 10 days or so, things become a little bit better. Yeah.
Well, from the perspective I have, I've been a long time vice chair of Asian Society, which is a very important conduit between U.S. and China and U.S. and Asia. And we are privy to having a lot of backdoor communication from the very senior levels of all the different countries. And what we hear is very consistent with what Kevin was saying. What we were saying in advance is that the weakening economy in China makes it very necessary for Xi to try to not have any real hot or cold war. He needs to get his economy stronger. Biden clearly is facing re-election in 2024. So both leaders are under real pressure to preserve the economy, preserve the consumers' confidence in their countries. So they can't have any real open hostility. So I think for the short term and maybe medium term, you postpone any real really existential threats. Longer term, bets are off. So right now, both countries are actually cutting each other some slack. After the U.S. shot down the balloon, you would have thought it would have been a much more violent reaction from China. Not really. It's fairly quiet, quite muted. And whenever there's been recent slights from the Chinese to American diplomats, at the same time, Biden has not complained very much. So both leaders are trying to essentially accommodate each other, understand each other, have their own domestic audience to play to. So I think we're going to find some kind of accommodation. I think both countries want to de-risk, but they definitely cannot afford to. It's not only that they don't want to, they cannot afford to decouple. Their economies are too dependent on each other. And both men realize that their popular support depends on the economy in their own countries. So that takes were off the table for a while. I think people would say any invasion of Taiwan is imminent. I think they're completely wrong. I think it's always good to talk about it, makes headlines, but I don't think that's the case. And near term, there will be olive branches. At Asia Society, we hear a lot about let's keep the people-to-people relationship going strong. Remember the last time we had real hostility between U.S. and China? It was ping-pong diplomacy that warmed everything up. And as trite as that might sound, I think Beijing and the U.S. would like to have more people-to-people commerce. Beijing has been telling its friends in America who do business in China, work on your politicians. Don't let them get so hard on China. So I think both governments are appealing to their business community, appealing to the educational, cultural community to keep all those bridges open. So I think this is a good sign. So I think we are running out of, Laura, one last hand. We've had two ladies, we need to have one gentleman back there.
Hi, Dr. T. Thank you so much for coming and sharing with us today. I heard that you mentioned value investing is about both numbers and people. You look at people and someone with braggarts, someone more modest.
Can you speak up a little, please?
Yes.
Hi. So I was wondering, like, how important is the numbers versus the people? And is there a way to quantify it? Right.
I think the number is more important as long as it's truthful number. So I think number is more important, but you need to make sure it's a truthful number. Yeah, well, that's a good. Right, I finished that question, right? Okay. Because I know Lulu is busy. Yeah.
All right. We really have, one more.
Yeah.
We're running a little out of time. We want to say some time. Kevin will be here to stay for the reception. So there'll be an opportunity to, maybe why don't we do that? Because I see 3 hands. I hate to choose one. So why don't we I think all of us want to thank Kevin for this wonderful visit with us.
Good. Thank you.
And Kevin, here's a good trouble.
Okay, thank you very much. Thank you.
You know, this is a classic blue box.
Thank you. Yeah.
And then
Thank you, Lulu.
please stay for the reception, and everyone will be very happy to answer questions over our drink. Thank you again.
Okay. Thank you, Lulu.